Welcome to my midweek market recap, 22nd September 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. This is my email ID, my website, YouTube channel, and Twitter handle where I regularly share live market and stock analysis. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They run as add-ons on the Metastock and TradeStation platforms. That was the last slide. Let's continue with the live system, starting with a look at the global markets. First, we look at the Australian Index, All Ordinaries, AORD. Several weeks ago, it displayed the bearish headwind reversal signal at the very top in the weekly chart, and since then price could not go up. The backdrop color remained bearish. It had a trendline support. This week it tried to go below the weekly trendline support but recovered. It's right near the trendline support now. In the daily, it has now lower low and lower high and lower low, so it is in a downtrend for short-term trading. It is near the lower boundary, so we will not like to short now. If the price recovers somewhat, maybe to the trendline resistance, and goes down from there, that will give the next swing trade entry opportunity, which will be on the bearish side. Australian index is now in a downtrend. Next, we look at Japan's Topix index. Topix index is still having higher high, higher low in the daily chart. So it is in an uptrend. However, it broke below this trend line support. In the previous webinars, I explained that the price was far above the upper boundary. So we were not going to buy Topix, though it was in an uptrend. That would be a wise decision because from the top, price pulled back significantly. It is still in an uptrend, but we don't have any trade setup right now. China's CSI 300 index. That was moving sideways and it is continuing to move sideways. In a previous webinar, right on this candle day, I explained that though it at that time technically broke above a trendline resistance, the candle had upper tail indecisive shape, and that meant that the market was still inside a box at that time, and I suggested not to buy that technical breakout on that candle. That was very useful. Very next day it displayed the bear release signal, and then price came down to the lower edge of the sideways move, stopped right at the trend line support. Today the weekly is also having a trend line support. If price can go up from here, you may look for buying opportunities in individual fundamentally strong stocks. China market is continuing to move sideways, and UK market FTSE index, it was moving sideways earlier and that is continuing. No change in the status. In the weekly, price tried to go below the trendline support but recovered nicely, remaining inside a box. And lastly, India's Nifty 50 index. This was the strongest of the global markets and that is continuing. In the daily, we had a bearish headwind. On the day, it created a new all-time high, and I suggested caution. There was no short setup if you applied the checklist conditions for headwind reversal trade setup. It was the signal but not trade setup. That was enough reason to be cautious. After that, price came down slightly, not much, and then tried to go up again. Today's candle is indecisive. It is in an uptrend and it is already at the upper boundary. So we are not going to take any long trade now. There is no short setup also. The global markets changed a little bit from our previous webinar. The previous webinar was the weekend webinar. The changes in the Australian market that changed to downtrend this week in this webinar. What about the USA market? Let's look at the market ETFs. Let me continue to use Q Global for that. SPY, S&P 500 ETF, it stopped right at the trend line support in the weekly chart. So far, this week's candle shape is indecisive. There was trend line support earlier at this point. That trend line support is broken by Monday's candle. When Monday's candle reached the day's low, at that time I tweeted about the bucket analysis showing extreme oversold condition. I had taken several bearish trades when the market was at a very high level. I took the short trades in individual stocks using Q analysis. And when I saw the extreme oversold condition in bucket analysis on Monday near the low of the day, I booked profit in many of them. That was a very good idea because price closed much above the day's low. Yesterday, Tuesday, price tried to go up but closed lower. Is it in an uptrend now? No. The trend line is broken in daily, so it is not in an uptrend. Is it in a downtrend? We have lower low, but to have a clear downtrend, this is what I would like to see. I would like to see price go up somewhat, somewhere in the middle of the two boundary lines and come down again with a bearish flow candle. That will give a very nice low risk short setup in SPY, and if that happens, there will probably be plenty of nice looking short setups in individual stocks. Right now it is below the lower boundary. I'll avoid taking shorts, and certainly there is no long setup at present. What about NASDAQ ETF QQQ? This is looking better. Here the daily uptrend is still intact. Price closed on Monday and Tuesday near the yellow direction line. The previous watermark low is not breached yet, so it is technically still in an uptrend. The weekly candle shape is indecisive to slightly bullish because it has a long lower tail. It is near the lower boundary, so we are not going to short now, and both daily traffic light and weekly backdrop colors are bearish, so we are not going to buy as well. TDIA Industrials, this was in a downtrend in my previous webinar as well, and that downtrend is continuing. In the last webinar itself, it had lower high, lower low. This Monday, like the other ETFs, price fell down but recovered significantly from day's low. Yesterday tried to go up and came down again. It is below the lower boundary. Traffic light color is bearish. Backdrop color is bearish. We are not going to buy now, and it is too late to short. IWM, small cap ETF, that is continuing to move sideways. In the global markets, we saw slight change, bearish change, because Australia market came down, and in the USA market, from weekend webinar, we also see a bearish change. That is, SPY is now in a downtrend. DIA was already in a downtrend. QQQ still remaining in an uptrend. IWM continuing in a box sideways range. This seems to tell that today probably is not the right day to initiate many new swing trades. Another reason would be that today at 2 p.m. there is a central bank rate decision that may or may not move the market, but it has the potential to move the market. It will be safer not to take any swing trade before that announcement, and probably before tomorrow, to see how the market closes today and then initiate new trades tomorrow. Therefore, I don't have a preferred trading direction right now. I would rather wait before taking new trades. Now let's see if that view changes if we look at the market internals. Let's look at the Megacap top 20 first. And in these webinars, I keep on mentioning how I analyzed the same instruments in earlier webinars to see how the analysis is working out. It's not the point to make that every trade or every analysis is correct. We have to be accurate more often than not. And if you follow the YouTube videos, you will see that this technique of buying swing lows, shorting swing highs, and then aligning industry strength weakness, fundamental strength weakness, technical strength weakness, they work quite well. That worked well for Megacap top 20 as well. This is a custom built index comprised of the top 20 Megacap stocks in the USA market. When price was at this point, it was near the upper boundary. I mentioned that that was not the time to buy. If anything, one could short. Why? Because firstly it came to the upper boundary, then it displayed bear release signals, and it was at a price level where bearish headwind reversal signal came, and that led to a price drop. So it was likely that some more selling was still left. That analysis was once again spot on. From that swing high, price could not go up, instead it came down. Came down where? To the lower edge of the range, stopped right at the trend line support. We could short at the upper edge when I discussed that it was not a good time to buy Megacap top 20, and now it will be too late to short. We saw that it is too late to short the market ETFs, and it is too late to short the Megacaps as well. When I discussed the weakness in Megacap top 20, possible impending weaknesses Megacap top 20, I actually took a few short trades in Megacap stocks, including Apple, including Facebook, and I have booked profit in both of them. And these are the trades I discussed publicly in my webinars and forum and Twitter. I never share ideas or talk about which trade hit profit target, which trade hit stop loss, if I didn't discuss them when analyzing the trade or entering the trade first. So Megacap top 20 once again acted just as one would expect based on the Q analysis. It is inside a range and lower edge of the range, too late to short, and there is no buy setup yet. But if price can go up from the trendline support, that may be a signal to buy Megacap stocks if not using daily charts. Why I'm saying if not using daily charts? Because on daily charts there may or may not be a Q buy setup. If not using daily charts for that reason, maybe using fine-tune intraday charts. Megacap also sideways, came down but too late to short. What about the composites? Let's look at the market internals now. Looking at NASDAQ as a whole, NYSE as a whole. First, we look at the percentage of stocks above 50-day moving average. For NASDAQ, it is just below 30%. For NYSE, it is closer to 25-26%. In the previous webinar also I showed that though NYSE was earlier stronger than NASDAQ in terms of percentage of stocks above 50 MA in the last few webinars, and also we see in this current webinar, NYSE is actually weaker than NASDAQ. Is there any bearish divergence in the advanced decline up down volume new high low? For that, let's switch to weekly interval. I switch to weekly interval, and there is no bearish divergence in advanced decline up down volume new high low. If you look at new high low, the red histograms are more to the lower side compared to NYSE. So in terms of new high low, NASDAQ is actually weaker. But overall, and this overall calculation is based on percentage of stocks above 50 MA, NYSE is stronger. Now let's change back to daily interval, the 3-month new high low plot. Whenever it hits the lower extreme, we expect a reversal upward, and exactly that happened for both NASDAQ and NYSE. If you kept an eye on this 3-month new high low hitting the lowest extreme, then you could look for some buying opportunities, and those stocks indeed went up because the new high low tilted up yesterday. It is still significantly below the midpoint 50% level. In the weekly interval, we saw there was no bearish divergence in advanced decline up down volume, but in the previous few webinars I showed, and that is true in the current webinar also, the advanced decline and up down volume is coming down. How can we use it? If we see now this week, the up down volume is breaking above these previous peaks. Advanced decline is breaking above the previous peaks. You can draw an imaginary trend line in your mind, and if you see the new high low is breaking above that, up down volume is breaking above that for both NYSE and NASDAQ, that would point to a buying opportunity at swing low. That is how you may use the market breadth, advanced decline, up down volume. Very useful studies. They almost always shows the market's real strength and weakness before that is reflected in market indices, futures, ETFs. Now let's look at the Q Global total view, market breadth total view, to see if there is any distribution count. As I mentioned in previous webinars, the market in the past never dropped significantly sharply unless we had a distribution count of at least 2. And for many days I was not seeing any distribution count. Then on Monday we had a distribution count of 4. So that means now we will not be surprised if we see the market is dropping significantly. Will it happen? That we don't know, but at least one required condition for market to drop significantly, that has occurred on Monday. Was Monday the time to short? No. I mentioned earlier that using the Q edge bucket analysis, it was in an extremely oversold condition, at least at the low of that day. So it would not be the time to short stocks. But now on daily interval, we see the distribution count. We may be ready or at least not surprised if the market drops significantly. What I would like to see for shorting stocks with more interest, I would like to see price go up somewhat, then go down again with another distribution count of 3, 4 or more. And if that happens at a swing high or near the swing high, and that next swing high is below the previous all-time high, then I will be pretty happy to short at this point. That is, create a lower high in the market ETF with a large distribution count coming in at that swing high. That will be a sweet spot, you may say, to short stocks. I'll keep an eye on that. Is there any Hindenburg? No, no Hindenburg there. Is there any Phoenix? When Phoenix comes at the market top, that is a signal that we may be getting ready for shorting stocks. Phoenix is also not there. Phoenix will show up as magenta candle color. Eureka show up as cyan candle color. But there is no Phoenix in recent days, no magenta candle color. Now let's look at the percentage of stocks above 50 MA for market breadth total view. What is the total view? It is based on the calculation, composite calculation from NASDAQ as a whole and NSE as a whole, as well as from the 4 major indices. That yellow line, percentage of stocks above 50 MA, is slightly below 30% now. It's coming down in a downtrend, lower high, lower low, below the midpoint 50% level, below the average line, the yellow dotted line. So under the hood, the market is pretty weak. There is no bullish signal in terms of market breadth to try to buy stocks. What kind of stocks are in favor? If we look at growth versus value line, magenta line, that is still tilting up. So growth stocks are doing better than value stocks overall. And small cap versus large cap, small cap is slightly declining relative to large cap. So if you use these two insights, then you may look to buy growth stocks that are not small cap stocks. That is from a overall market breadth perspective. Of course, the final trade will be taken based on Q 360 degrees analysis. The market breadth is bearish now. The yellow line is coming down. We have a distribution count, but it was also at a oversold condition. If you look at the 3-month new high low for this total view, oversold condition on Monday, and then Tuesday it tilted up. So Monday you could look to buy some stocks or at least short the put or short put verticals in very strong fundamental stocks using these oversold conditions. In fact, on Monday I had a session as part of the Q master class, and if you remember, in that master class I discussed only one stock to give an example of options trading using Q systems and Option Station Pro Interest Station, and that stock was Tesla. Now you see that the market was oversold from multiple angles, from bucket analysis, from 3-month new high low, and this was the day when I was having the webinar. Tesla had a trendline support. In the Q master class, I discussed only one stock, just as an example, not really as a trade setup, but I explained in that trade, in that webinar, that you could either short the put on Tesla or buy long call vertical, not short put vertical, because the volatilities were not in favor of short put, it was favoring long call. And if those trades were taken in a real account, those trades are in a profit by now. Today in the overnight market, it is up again by 0.53%. In that analysis, I hypothesize that it may come to 750 or around that price level. We'll see if it hits there. But in any case, if those trades were taken and they were taken using intraday fine-tune charts, I expect them to hit the either hit the initial profit target today or at least cover the risk distance. The risk was using intraday chart, so price, if it opens around 743, I think it will already cover the risk distance. Why I came back to this Tesla example is to show that when the market is oversold from multiple angles, from 3-month new high low, from bucket analysis, then you may look to buy stocks and volatility would be very high. So shorting put is an attractive strategy for that. But short the put may be done only in fundamentally strong stocks and also in stocks that you are willing to hold in case the stock drops. In any case, that analysis on Tesla also worked out quite well. Now there is no bullish signal. There is an oversold signal in terms of 3-month new high low, but there is no bullish signal in market breadth total view. Now let's look at Q edge and see how sector industry stock performed. Before looking at Q edge, I want to show you one snapshot I shared on Twitter just today, a while ago. That is an analysis of sector performance last 5 days and previous 5 days. In last 5 days, all the sectors are down. Previous 5 days also all the sectors are down. And see the red bars, this is the past 5 days performance. All sectors are down by pretty significant percentages. Materials down by 4, utilities down by 2.8, infotech is also down by more than 2, industrials down by more than 2%. And previous 5 days also they were down by big percentages. Materials down by 3%, utilities 2%, etc. So last 2 weeks all the sectors came down. Now it is looking more oversold. So that is another reason you may not short now. It may be a bit too late to short. And that picture may come out from Q edge analysis also. The very useful sector industry stock advanced decline graph covering 1 month to 1 day. This 1 day, 2 day periods are flip-flopping constantly between green and red. So whenever they are turning very green, I'm expecting them to turn red. When they are turning very red, like now, I'm expecting them to turn green. That is assuming that the flip-flop will continue. Now they are both red. So it is not surprising to see that they turned green, at least more green than it is now. And now not only 1-2 days, but 5 day, 10 day and 1 month. Everything is bearish. It's quite oversold. And if we look at, let's look at the sector performance. Now compare 5-day performance with 10-day with 1 month. 5-day we already saw all sectors down. 10-day also all sectors down. Over 1 month, 3 sectors are up. Which one? The blue bars. One is energy. Energy is being up down. If we leave that aside, the other 2 are healthcare, defensive sector, communication services, up by a smaller percentage, also may be considered as a defensive sector. All the other sectors for all the other periods are down. Some of them are down by quite large percentages. That may also show that the market is closer to being oversold. But I'll be happy to see that the bucket percentage in the lowest extreme bucket hit the 30% level. Now, if you watched Q Edge or followed me on Twitter, then you know on Monday it hit almost 50%. That was extreme oversold. Whenever it goes to 30-40%, I expect a reversal. So when it hit 49-48% intraday on Monday, that was the time I was starting to book profit in my short positions. And yesterday also, if you looked at it in real time, it actually hit 30% level yesterday. That is also closer to being oversold, and that was why I didn't want to short anything yesterday, not using daily interval. And now I may wait for the Fed funds rate decision to see if that is impacting the market and then take the next swing trade. If you look at the percentage of stocks below mid Bollinger Band, that is 84%. That is very bearish. Yesterday it improved little bit, 2% improvement. One day earlier it was 86%, improved little bit by 2%. It is also pointing to a oversold picture. Oversold conditions may remain for extended period, so I don't buy just looking at the oversold period. Buying decisions will be done based on actual Q trade setups on individual stocks. But I will not be surprised to see market recover somewhat from here, and if that happens, if there are Q long trade setups, I'll be happy to take them. Lastly, let's look at the technical breadth using Q Finder, the balance between bullish and bearish signals, first using weekly interval. All signals 93% bearish, strength signal 100% bearish. That is as bearish as it can get. Trend continuation also 93% bearish. Reversals are balanced. Slightly more bullish you may say, but it is not required to be so precise. We may say it is balanced between bulls and bears. But if you look at the actual number of reversal signals, that is very small compared to number of gap ups. So though reversals are balanced, when we combine strength and reversal in this case, we have to still say it is bearish because gap downs are much more than reversals. This is bearish, and not only that, more than 90%, 100%, more than 90%. This is probably closer to being oversold than anything else. If we look at the daily interval, yesterday's picture, it is in fact more bullish than bearish. 66% of all signals bullish, 84% of strength signals bullish, trend continuation 41% bullish, so it's more bearish than bullish. Reversal is also more bullish. Overall, yesterday in terms of technical breadth was actually bullish. You might probably look for some buying opportunities yesterday looking at this technical breadth. Now I'll not look at many more stocks today. Let me just discuss two more instruments. Tesla, I already discussed how it worked out after we analyzed it in the master class. I want to discuss two more stocks. One is Comcast, CMCSA. I shared it as a short idea on this large down day, and because it was down by a very big percentage, very bearish candle, long bearish candle, one would not short using stop loss would be far away. One could use short call vertical. That's what I did. That's what I explained earlier when I analyzed the stock first, and that was on this day. And that is working out pretty well, isn't it? That is in profit. I'll keep an eye on it. If it is stopping at the watermark, not able to go below this watermark support, I will book profit in the trade. I will not like to erode profit in the trade. Now, two more instruments I want to discuss. IWM is one of them. Yesterday, I tweeted that market was trying to go up but not able to go up. If you use real-time Q edge, you could see the market breadth opened bullish, but it was turning bearish. And I mentioned that if you wanted to short, which ETF would you short? And the correct answer would be IWM. And let's look at the 4 market ETFs using 5-minute interval. Fine tune chart. Okay, to fit it on one screen, let me change to 10-minute interval. In real life trading, in the morning session, one would use 5 minutes. Now, after the market open, all the market ETFs, IWM, DIA, QQQ, and SPY created the early range. After that, DIA broke above early range high. QQQ did the same, SPY did the same. But IWM could not go above early range high. Instead, it broke below early range low. And that was the time when market breadth was weakening, not only in Q edge but also on Q elite market breadth. Here, I'm not going to discuss the market breadth again. I tweeted about it at that time. You may look at the tweet. And looking at the movement of the 4 market ETFs across the real-time dynamic pivot lines on fine-tuned chart, you would prefer to short IWM and not the other market ETFs. Your stop loss would be just above early range high. Stop was never hit. Instead, when price went to the next pivot, it already covered more than the risk distance. You could book at least partial profit and apply trailing stop on the remaining position, which would exit when IWM tried to recover. That would be the way you would select IWM to short using intraday fine-tune chart. Will you short any of the market ETFs using daily chart? No, I already went through all the market ETFs and I showed there was no short setup or long setup using daily interval. This is a tweet I shared during the market hours yesterday explaining how you could short one of the ETFs, in this case IWM, using fine-tune chart. One last talk that I would like to discuss before ending today's session is UAA. A consumer discretionary stock. I shared it as a short idea on this day. That was a breakdown and go with flow short setup. Then you could book profit, at least partial profit at the lower boundary. And in the previous webinar, I mentioned that if you are holding remaining position, you could keep a close eye on how the stock is acting when it hits the weekly trend line support. If you did that on Monday, when it gapped down, that was the day it hit the weekly trend line support and then it didn't go down any further, you could book profit in the remaining position. These trend line supports work quite well and you already are far away from your entry position. You could book profit, or if you wanted to hold on to partial position using trailing stop, that would be fine. But if you are swing trading, it would not be unreasonable to exit the full position at the weekly trend line support, which was far from your entry price, and the day ended with doji shape candle with indecision at the bottom. That was Monday. Tuesday also closed with doji candle with indecision at the bottom. If you didn't exit, you may keep an eye. If price goes above the high of yesterday's doji candle, you may close the remaining position in the short trade taken on this day. This is again an example of a trade taken and shared publicly before knowing the result that worked out pretty well. I'll not go through more trades today. As I mentioned, there is a Fed funds rate decision today at 2 p.m. It may be safer to wait to see what is happening in that before taking the next trade. Thanks a lot for joining me today. I look forward to seeing you in my next session. There is a Q masterclass session that is tomorrow 11 a.m. that is open to all the people who registered, and the next public webinar will be during the weekend. I look forward to seeing you in that as well. Thanks once again. Keep safe and trade profitably. No reason not to do that.